Here we go. Okay, so today we're gonna be talking about rental index. It's a very interesting metrics, and we're gonna be using that to find the best possible cash flowing properties in our database or in any way where you can start analyzing deals. So the way we look at deals is a little bit different from folks who talk about cap rate and the returns. The reason we are not going to the cap rate and using the folks where the Wall Street folks are using to analyze deals is that when you're looking at, when you only have between 0 to 10 properties, your cost of managing these properties is variable. They are not very uniform. So in order for you to calculate a good cap rate, you actually need to know your cost of money and your cost of managing the properties really well. So when you're building a portfolio between 1 to 10 properties, which we learn is actually the majority of kind of the single family owner or investors out there, rental index is actually a more appropriate metrics to look at and analyze deals. And from there, you can then use a calculator to kind of punch in all the right numbers that are only for you, and you can calculate your own cap rate. But trading properties based on cap rate is not going to be very ideal because everybody who are between 1 to 10 properties have different cost bases, and so that cap rate for one person is going to be different from the cap rate from another person. So what is the rental index? Okay, so we're going to focus on a couple of things. We start from the basis of for automation, and we're going to go into that a little bit. We're using the technology of MLS Deal Finder that automates a lot of the deal analysis process. And through all these analytics, we can then use the rental index to find properties that can yield the best possible cash flow for you, which is what you care about when you are owning properties. So what does that mean? So automation, what it is that with MLS Deal Finder, what it does is it's basically an engine. And maybe I should backtrack a little bit. We have figured out an engine that can run real estate valuations automatically. So when a computer can do it, it can calculate thousands of properties every minute. So in the DFW area, Dallas-Fort Worth area alone, we can capture all the information and analyze thousands of properties on a daily basis. When you can do that, we can look at the sold price. We'll compare the asking price to the sold comps of that particular property and identify houses that are priced under market value. And we can also look at the leased comps to see how much the house can be rented for. And based on that, we can calculate the rental index that are good for buy and hold properties. Okay? We're not going to go over the first one, which are houses that are under market value. We're only going to focus on rental index and looking at the best possible rental property on the market. So essentially, it's a database with a lot of analytics already done, and we're just going in there and just very quickly filtering out the properties that are good for buy and hold. So let's look into a little further, okay? So what do we mean by analytics? So remember this formula, you might want to write this down, okay? So the rental index is calculated by dividing the monthly rent, okay, which is based on the rental comps or lease comps. Those two terms are interchangeable. And dividing that by the asking price or the purchase price of the property. Okay, so just write this down. We're going to come back to it, and we'll be looking at it from a little more intelligence type of level. So let's look at rental index just based on that formula. Okay, if the purchase price is $100,000 and we can rent it out for $1,000, Okay, if we divide the two numbers, it's basically 1%. Okay, so the rental index is 1.0. Okay, that's one example. So if we stay with that purchase price of $100,000, okay, and we look at the rental price, okay, if we can rent a house for 1,000, the rental index would be 1.0. If the rental price is $1,200, then the rental index is 1.2, and so on and so forth. So basically, what that means is that if we turn it around, the higher the rental index for the property, the more rent you're gonna get out of owning that property. And so that's a conclusion. The higher the rental index, the higher the cash flow. So if we, throw this, if we don't take this, if we take another example, instead of a purchase price of $100,000, let's say it's something weird. It's $156,000. If we start looking at just the rental index, it doesn't matter what the purchase price is. All we care about in terms of metrics and comparison is looking for houses with the highest possible rental index, because it's going to yield the best cash flow for us after paying off all the expenses of owning the property. So that begs the next question. If I'm using MLS Deal Finder and I'm looking for rental index, what kind of rental index am I searching for, right? The short answer is we want to look for the highest one. Okay, so if I go back to a previous slide, you can see the conclusion here on the right. The higher the rental index, the higher the cash flow. So I should be looking for houses with the highest rental index, because it's going to be most likely to yield the most cash flow and the most profits for me for owning that property. The other part of the question is, what is the minimum rental index I need to look for, right? Because the highest possible cash flow, while it's great, it's also going to be very competitive. So from your standpoint as an investor, what is the rental index, the minimal rental index that's going to find a property that's going to be a good buy and hold for you? Because you may not be able to win the best deal, but if it's still a very, very good deal for you, well, that's great, right? Everybody wants the best deal, but not everyone's going to win it. But as long as you can find a good deal for you, it's going to be a good day for you, right? So to kind of go there, we need to understand the 1% rule of thumb. And the 1% rule of thumb says that based on how much you owe on a property, your monthly rent needs to be more than 1% of how much you owe, the principal of your mortgage, basically. Okay, and again, that's just a general rule of thumb, right? A little for those who are a little more advanced, you will understand that on top of this, if your interest rate is higher, you're gonna need to look for something that's more than 1%. Or if your interest rate is actually lower than anybody else, you can look for something that's less than 1%. But the general rule of thumb is you need to be renting out for more than 1%. That 1% pays for the cost of owning that property, the mortgage payments, insurance payments, and so on and so forth, of just upkeep of that property. So if you can rent it for more, the addition of that's going to be your cash flow, right? Because after you're paying off all your expenses, the rest is going to be your profit or your cash flow of owning that property. So again, keep this formula in mind. And for those of you who are a little more math inclined, you will notice that the rental index formula and this 1% rule of thumb formula is actually very similar. Okay, and if you do some math manipulation, I'm going to just give you the answer right now. There is a insight here, is that what kind of minimal rental index you are looking for depending on how much loan you're taking out. So the short part is that if you're taking out a loan that's 80% of the price of the house, of the home, then your minimal rental index is 0.8. Okay. On the other hand, if you are taking out 75% of the loan and you're paying the other 25% in cash, then your minimal rental index is actually lower, 0.75. So think about this for a second, right? If another way to look at it is that if you're putting more cash down, you're owing less money. And so you can look for houses that can bring you a little less cash flow because you need less cash flow to pay off all the interest and all the costs of owning that house. Another thing is, hey, if you're an investor and you only want to put 5% down, right, and take 95% out of loan to pay for that house, then your minimal rental index is 0.95. Okay, so it's very simple, right? Your minimal rental index again is just kind of how much percentage of loan you're taking out. That's the bottom line here. So in conclusion, two things: the higher the rental index for the property, you're gonna get a better cash flow. And the second part is the minimum rental index depends on how leveraged you are, how much loan you're taking out. Again, another example, if you're taking out 85% loan and paying and putting 15% down, your minimal rental index, it's gonna be 0.85. Okay, so take some notes there. Okay, so let's look at kind of the macroeconomics level, just a little bit outside of the rental index here. There are two factors when you're looking at the rental market and in terms of determining the market rents. Okay, there are two factors. One is you as an investor. Okay, I kind of talk about this a little bit. You as an investor and your cost of borrowing the money. Okay, if you have really good credit, right, your cost of borrowing money is lower. Your interest rate can be lower. Or if you own a lot of properties, right, the banks are not going to be willing to loan you money at a low interest rate anymore. Your interest rate is actually going to be a little higher. Okay, when your cost of money is higher, you're going to need more cash flow to cover those costs. Okay, and the other part is the geographic area. Okay, when you're looking at the geographic area, a good example would be an up-and-coming neighborhood where you can probably rent out the house a lot higher than comparing to the purchase price than a really, really nice neighborhood where a lot of families want to move in. An example would be like Plano in Collin County. Okay, you're gonna have to pay a lot. Your rent is higher, but then the home prices are also much higher. So your rental index is actually gonna be a lot lower in the Plano area than the kind of, let's say, South Dallas, in kind of the area where you can rent a house for say $1,000 a month, and the house is really only worth less than 100,000. So that ratio is really, really good. But then there's other factors you gotta come into when it comes to deciding if that's a good property for you, if that's your preferred rental area. For those of you who have been landlords or who are landlords, I think you understand what I mean, is that the neighborhood matters, right? Your quality of tenants matter. I guess I'll leave it at that on this slide. Okay, so you as an investor, I kind of talk about it, your cash and your down payment. Okay, you're putting down more down payment and you're a little less leveraged, right? You don't need as high of a rental index and for that to still be a good deal. And then the other part is your financial structure, your cost of borrowing the money, and kind of looking into it a little deeper, your cost of managing the property, right? If you're managing it yourself versus you're hiring someone professional and a big company to manage it, your cost structure is going to be different. So again, kind of the bottom line of this is the higher the cost, right, the more cash flow you're going to need, and you're going to need to be looking for a higher rental index. Okay, so that's kind of basically what I meant. The higher the rental index is going to be, you're going to need a higher rental index, the more your cost of running your business is. Okay, if your cost of running business and owning the property is less, then you don't need as high of a rental index. And then let's talk a little more in depth about geographic area, kind of going back to what I was talking about. Okay, it depends on the supply of rental properties in the area and the demand of the rental property. So we're going up and talk about a little more of the macroeconomic scale of the area, right? Everybody understands the supply and demand curve. If there's a huge demand on the property, on rental properties in the area, your rent, you can rent the house for higher, right? Comparing to supply. If you have a lot of supply and not enough demand, then your monthly rent, your monthly income for owning that, for renting out the house is not going to be as high. It also depends on the infrastructure of the area. Okay, if there's a lot of development in the area already, and it's a very highly desirable area, then the the pricing of the houses are going to be higher. Okay, and you're not going to be able to get a very high rental index. However, the other side of it is that you're going to have really high quality tenants who are willing to pay a relatively high amount of rent and staying forever, even though it costs you more to own that house. So, kind of going back to this chart, okay, the lower the demand, the less the infrastructure, right? You're going to yield a higher rental index. Okay, so the two examples that we have given you is this. Okay, and here's the bottom line here. You have an area, let's say Plano in the area. Toyota's moving in, State Farm's moving in, and everybody really wants to own a property in the area. Okay, the cost of owning the house is very high, and let's say it's $300,000 for example, and you can only rent out the house for say between 2,000 to 2,500. Okay, that's how much the market is willing to pay. So if you look at that rental index, you're looking at between zero point 0.6 and zero point 0.9, right? But if you prefer to work with those kind of clientels, those are the numbers that you're going to be dealing with. And the cool part of that is that you're going to have very low turnover rate. Okay, when you have low turnover, even though your monthly cash flow is not as high, it's going to end up yielding about the same as area 2, where you can get a really high monthly cash flow, but you have a much higher turnover rate, and your quality of tenants is not as high, and whenever they move out, you have to go in and replace a whole bunch of stuff. So your profitability, it may end up being the same between area 1 and area 2, and it depends on your preference of tenant and whether you have a system in place. If you're already familiar with dealing with a particular type of tenant, then you can be extremely, extremely profitable in, say, area 2. I personally know several investors who are really, really good at owning properties in the cheaper neighborhoods where they can rent out for a lot more, because they already have a crew that knows how to deal with properties that needs to get fixed up really quick, and they know how to deal with those tenants. So they're specialized in the area in area 2. And if you're a newer investor and you're just kind of looking for passive income, you probably want to stay in kind of the area 1 type of neighborhood where you have high quality tenants and it doesn't require as much hands-on. Okay, now regardless of what your preference is, okay, both are going to be profitable, and the whole idea is how you can find the best property in those areas, in each of these areas. Okay, so if you know that the range of rental index in area 1 is between 0.6 and 0.9, guess what? We want to look for houses that are close to 0.9, right? Because it's going to find the best cash flow for me. And on the other hand, for area 2, if we know the rental index range is between 1.2 and 1.8, well, I want to yield the best cash flow. I want to find the houses that have the highest rental index, which is closer to 1.8. Okay, so that's the bottom line. Is first of all, when it comes to buying rental properties, you want to decide on which area, which city, or which even subdivision or neighborhood that you want to own properties in, and then you want to look at the general area on what kind of range you're looking at for the rental index, and then you want to find the best ones. Okay, so that's a lot of words. Let's use MLS Deal Finder and use the search function to find, we'll pick an area and we'll analyze it using rental index. Okay. Right, quick, let me try to log in here. Okay, so I think most of you are already familiar with this interface. Look at this. We have over 17,000 properties that have been already evaluated. We did 560 in the past 24 hours. Okay, and we can look at it by discount. Okay, we already categorized all of these properties. And we can categorize them based on the rental deals. Okay, these are houses, again, that are for sale, but after looking at the rental income, the rental comps, they are deemed to be good properties. So just very quickly, I want to make sure everyone gets the point. There are 115 properties that are between rental index 0.8 to 1.0. So if you are planning on putting 20% down, 0.8 to 1.1 is very good. Okay, these are good properties for you. There are 19 that's 1 to 1.2. So you're looking for a lot of cash flow, right, for owning that property. These are going to be the deals that are for you. Now, it's possible that these houses are going to be in the less desirable areas. Okay, and then there are also properties that are higher than 1.2. So there's a shortcut here that we can look at. We're showing you all the properties that have a rental index of more than 0.8 in the past 15 days. So here I can pick a county and I can click on submit, and it'll give me the list of all the recent deals we found in the past 15 days. So I'm just going to very quickly show you the functionality and making sure that it is a good deal, and then we're going to go to the search function, which I showed you earlier. I'll show you how to do a little more in-depth analysis there. So here, these are all the deals in the past 15 days in Dallas County. We got a little heat map here. All the properties we found are here, and it's color-coded. So the red ones are in pending, and the green ones are active. And so we can see all the numbers here, address, list price, how much we estimate it to be. This is a discounted property on top of also being a good rental property. Okay, rental index 1.68. That's a really, really, really good number, and it's already under contract, right? Active option. And down here is a list view. So let's look at well, this one doesn't have pictures. Okay, so if it doesn't have pictures, maybe it could be a very good property, good investment property. But let's pick this one. It has pictures, so I can show you all the capabilities of the system. So we got the address here, bedroom, bathroom, and all that information are here. And then you can look at the rental index. So it's asking for almost 130,000. Okay, they already dropped it by 10,000. You can see the original list price is 139,800. They dropped it by 10,000. And we estimated the monthly lease to be 1090. Okay, so dividing these two numbers, we get the rental index of 0.84. So if you're borrowing 16%, if you're borrowing 84% of the asking price and you're putting 16% down, this is an acceptable property for you. If you're putting 20% down, uh, it's going to be a okay, pretty decent property. Okay, and then based on the sold comps, there is an estimated price. Okay, so here preliminarily we think it's a little bit overpriced, but we still need to see the comps to see if that is truly the case. The same thing here. We want to see the rental comp to make sure that it is truly very good. You can rent it out for over $1,000. So click on the address. I have another advanced training that goes over how to analyze properties. But here you can see we're looking at the sold comps data view, and we're looking at this is the property that's for sale, and these are the properties that we have chosen as comps. If you look into these a little further, you can see the price per square footage is a little bit lower than the rest. Okay, these are 130 something, this 125, these are under 100, and these are all in the same subdivision. Okay, when you look into it a little further, you can see this is actually a more of an investment property, and so is this one that doesn't have pictures. So please look at the other advanced webinar about how to analyze deals. I'm just kind of showing you how we can change comps and come up with a better valuation. Everyone runs their comps a little bit differently, so all the data is here for you to adjust the comps and adjust the estimated price. So we're here for buy and hold properties. So let's go and look at the buy and hold, the rental comps. So here we're looking at the lease comps in data view, and these are the comps that are already on here. So we have chosen 1, 2, 6, and 7 as comps. Some of you may want to be a little more conservative and only stay in the same subdivision. You can do that by using the checkboxes and click on recalculate CMA, and you can modify the estimated monthly lease. So it's about the same. It was $10.90 earlier, and now it's $10.95. And then you can see price per square footage for each of these properties. You can see the lease price of all these properties, and a lot more information, right? So the tutorial video is gonna show you how to get all these information and what they are and so on and so forth. I just want to show you the capability and how to analyze deals very quickly. So we got a data view, and then we have a map view to show you where all the deals are. The red ones are the comps we have chosen. The green ones are the ones we have not. You can see that these are, even though in a different subdivision, it's just right across a very small street. So you're very familiar with the area, you may decide that 6 is a good comp, and so on and so forth. And then these, the photo view, you always want to look at the condition of the properties and see if there's any discrepancy or how much you need to put in this property to make this work. So you can compare the condition of the comps. Looks like they're all about the same. Okay, so you can look at all these properties very quickly and analyze it. So in conclusion, this looks a pretty good comp to me, and at 0.84 as rental index, if I'm putting 20% down for the property, and I don't need to fix up this property much, this might be a good buy and hold for me if I'm not ambitious. If I'm not too ambitious about buying a property that is significantly underpriced. Okay, so this property is kind of priced pretty much on market, but it can yield a pretty good cash flow for you. And so you can own the property, hold it, and wait for appreciation to kick in, and or continue building your wealth. So for those of you who are just looking for a good passive income, this might be a good property for you. Okay, so I'm just gonna spend a few more minutes about the search screen here. This is a little more of an advanced function of the property. And here I can use all these fields to basically help me find the best rental index in any area. So let's say I want to invest in Addison, which is kind of difficult to find good deals. and I want houses that are between 50,000 to 500,000. I want to set a CMA date. Usually we do the past 30 days. So we got January, so that's the day of today, and perhaps December 1st of last year. Okay. And here I'm trying to see what kind of rental index range I'm looking at here. And knowing Addison, I'm not very hopeful, so I'm gonna try 0.5 to, well, I want to see how high I can go, so let's put 5. Okay. So I would hit search, and what it's gonna do is look at everything in the area and find the properties that fit that criteria from 0.5 to 5. There's only one, okay, and 0.57. 0.57 is not really a very good buy and hold property, really. So, what that means, Addison is probably not a good area to invest in right now if I'm looking for a good cash flow. Let's try something else. Let's try Ellen. Ellen is a pretty popular area too, but let's see if we have better luck. So I keep everything, all the search the same, and click on search. Let's see. Oh, we've got a few more hits. Okay, so you can see where they are and so on and so forth. But I'm more interested in the range. I'm looking at 0.53 was the highest I got here. Here I'm showing between 1 to 10 properties. So maybe I want to look at everything. The highest I see is 0.71. So let me go back here so you guys can see it. That's this guy right here. Okay, and it just hit the market on the 20th, and we found it right away. It looks like this. Okay, so that's one example where you can use the search function to see what kind of range of rental index you're looking at. And then, if I were you, I would analyze the best deals, But again, it depends on how much money you want to put down. 0.71 is in general not a very good property to purchase unless you're going to buy all cash and wait and just kind of wait for appreciation. Usually, you want to look at putting 20% down and and still be able to put a good cash flow. So usually I recommend folks to look at a rental index of higher than 0.8. Okay, 0.8 or higher, you're gonna be a little bit better because you're a little more conservative financially. Okay, so that's the end of today's online training. If you have any questions, feel free to put it down, and I would be more than happy to answer your questions. Again, we have a rehab budget class this Thursday at 6 o'clock. If you guys can make it, please attend. It's only $40 to attend the class if you sign up online. Alrighty.